Howdy there, folks. Welcome into tonight's video. Two to react to in this one. First one is on Microsoft in their numbers here in this one. Second video I want to react to is this one around economic recession has already been priced into stocks. It's an important subject that I want to discuss here in this video. Before we get into that, I got to get something off my chest here, okay? Because basically, if you haven't seen Microsoft stock, they reported their earnings, and we're going to go over those numbers here in just a moment. I'm going to give my opinion and things like that, right? But the stock's obviously popping. Now, all of a sudden, they did a poll on CNBC, and I'm watching this a few hours ago, and suddenly, everybody is feeling more bullish on the rest of big tech earnings, okay? Massive mistake. Epic, massive mistake. Microsoft is not Apple. Microsoft is not Amazon. Microsoft is not Google McDougal. If you want to get an idea of how the consumer's doing, if we're going into recession, any of those sorts of things, do not look at Microsoft numbers. Microsoft has built a business model that is going to thrive regardless of the economic conditions because their suite of products are a must. So if you're a business, if you're a consumer, you can't really cancel Microsoft's products. That's not how it works. But you know what you can do? You can decide to not buy the next $1,000 iPhone. You can decide to spend less on advertising for your business, which obviously affects companies like Google, right? You can decide to order less packages from Amazon. So this is a big difference in the big tech world between a stock like Microsoft and what we might or might not hear out of Apple. So the fact that all of a sudden these numbers come out, the stock pops, and people think it's time to go all in big tech because Microsoft reported, solid numbers here is a epic mistake because they are such a different business model than these other companies. And to try to derive anything that like everything's great now is just a massive mistake. Now, if you feel those stocks are undervalued, right, whether it be an Apple or Google or an Amazon you want to buy for long term, that's fair play. But if you think just all these stocks are going to go up now because Microsoft went up after hours, that's where you're going to run into some trouble here. Big difference between theirs. Okay. Hope you guys enjoyed today's video. As always, I appreciate everybody joining me. We are now 22,300 plus subscribers on the channel, so growing pretty rapidly. I appreciate every single person that subscribed to the channel. Glad you guys are enjoying it. Also, if you're looking to take your investing very serious over this next few years and build your wealth, check out basically the pinned comment down there. That will be to apply to join my private stock group in the private wealth group down there. Let's get into this.
Steve? Yeah, here we go, Scott. So we got EPS as a beat here, $2.32 adjusted versus the $2.29 expected. Revenue, a very slight miss, $52.75 billion versus the $52.94 the street was looking for. And Azure cloud growth, as you know, this is what we always look for. Investors are always curious about. 31% growth versus the 30.8% per estimates. That's just barely a beat there on Azure growth. But
so first off, if you're wondering why is this stock popping, after hours nicely here when those numbers just came in line. Like many times you see stocks like actually go down if they just report in line and they go up if the stock reports big. Microsoft is a stock that's been hammered, right? And Microsoft's one of the most beloved companies out there. So I think folks are just happy it wasn't a bad earnings, right? It wasn't like big mess on EPS or something like that. So the fact that they came in, reported roughly in line with what Wall Street expected, there you go. That's all you needed for a stock like Microsoft.
Is slowing quite a bit, Scott.
So you hit the key number there. It was 30.8 was the estimate, and that's probably why the stock was rising. But that, Joe, is the biggest number that we were looking out for, right? Because it is all about the growth in the cloud. We know that the PC business across the industry is bad. Yeah. So you knew that part of Microsoft's business was going to be slowing. It really comes down to a question of Azure. So it's 31 versus 30.8.
Mm-hmm. Cloud revenue for Q2 comes in a little bit better, 27.1 versus 26.75 is the estimate. Is there resiliency in these earnings? Obviously, based on the stock being higher, there is resiliency. Does it validate overall the move that we're seeing in technology? I think you have to have other companies bring forth their earnings here in the coming days. But specific to Microsoft, understand, here's the conflict you have. You have poor momentum. You have a technical picture in which the stock down 29% through the course of 2022, really underperforming the NASDAQ so far year to date. You've got the clash of what's negative momentum with resiliency and fundamentals, and the determination that you would have to make, and myself, is which one will win out over the coming quarter.
So my feelings in terms of Microsoft specifically there, and then we'll get into this one about economic recession has already been priced in stocks, which is a big subject, right? So bottom line with Microsoft, that's a company that should definitely command a PE is somewhere between the 25 and the 35 range. Very, very fair. If you go over 35, I think you're maybe looking maybe just slightly overvalued in terms of Microsoft. If you go over 45, you're definitely getting way overvalued for Microsoft. If you get it ever for under 25, that's where you're getting quite a deal. But a business model like that is as rock solid as Microsoft is with their cloud business and their suite of products that just people have to use if you run a business. Well, almost, I don't say every business, right? I don't personally use them, but most people do. At the end of the day, that's just a suite of products you just have to be signed up for. Businesses just continue to recur that revenue, right, through Microsoft. And so at the end of the day, it's a great company. It's as solid gets. 25 to 35, completely fair for that company. Like I said, over 35, I think you're getting a little rich. Over 45, definitely rich on Microsoft. So that's bottom line. The stock is actually a good value here. I don't think you're going to make the best return on investment with Microsoft by any stretch of the imagination. But are you going to lose money over the next 5 years? Highly unlikely. It's possible. Highly unlikely. Extremely unlikely nonetheless, okay? So that covers Microsoft here. Let's get more into this. Economic recession has already been priced into stocks, says Joe Terranova.
Being set extraordinarily low,
Without question,
coming into the number, so it doesn't take much. As Kovac was saying, it's not like you skyrocketed over the bar.
No.
In terms of the Azure number that the street was at, I mean, you barely got over that hurdle.
Look, I think it goes back to 2023.
27 right now. That's, it's in fair value territory.
3,200 S&P calls, 4,800 S&P calls. Balance emotionally somewhere in the middle and understand, don't get too high, don't get too low. Look to generate alpha opportunities and get paid to wait.
No, you know what
this is an example of that.
You know what the biggest problem may be? No matter what you say, and look, we have to wait for the call, okay? And the call's at 5:30. So we have a little bit of time to wait on that. But Nadella, the CEO himself, told you. He told you don't buy our stock. We got another 2 years of pain ahead of us for the sector.
He did not say don't buy our stock.
He didn't say don't buy my stock, but for all intents and purposes, he said don't buy my stock. It's going to be another 2 years of pain.
He did what a CEO should do in this environment. He guided to a very challenged environment. He's still investing in the business with the open AI investment. So he's making the investment there. He's doing what a CEO should be doing in this environment. And you've got the stock right now sitting at 253. Investors can make a decision. If you think the premium valuation isn't warranted, sell out of it right here.
I like Satya Nadella, by the way, the CEO of Microsoft. It's not personally a stock I own, but I got to say, I really like that CEO. And look what the stock price has done since he took over this company. Look what the revenues have done since he took over this company as CEO. Look at what the net income has done since he took over as CEO of this company. It is incredible. He's done an amazing job running this company. I think, certainly one of the best CEOs out there you're going to find. So, him kind of tempering expectations, I think is very fair, especially in this environment. I think it's very fair.
Take advantage of the rally after the close.
Well, what is the appropriate multiple? The street's going to have to decide. And let's not forget that Microsoft year to date, as the rest of tech has been rallying, it hasn't.
It has not.
It's done nothing.
But there, in fact, lies the challenge where you've got negative momentum, you've got poor technical conditions for the stock. It's a conflict between fundamentals and technicals.
What about Texas Instruments? We turn our attention back to that. I mean, it is important. You got the personal computing side that it sells into, the industrial economy. That's why it's important. Now, maybe it doesn't carry as much bellwether weight as it once did, but it's still important to somebody like you who owns the stock.
No, I disagree. I actually think that Texas Instruments is an important bellwether because of the move that we're seeing in the semis. And the semis are the 2020 transports. That's what they are. They're so relevant to not only the domestic, but the...
If you guys don't keep track of the semiconductor industry, I would highly suggest you do. And it's a good industry to get educated on. It's a very in-depth industry because all these different companies have different business models. And here's my semiconductor watch list. I have Texas Instruments on it. Cruisy doozy, we can actually pull up a 1 year and kind of see how these different stocks have done, right? Texas Instruments, that's pretty dang good. That's pretty dang good. Look at the 1 year. It's hardly down for Texas. That's amazing. Cruisy doozy, up 2%, which is insane to think about because this is a, obviously with all the worries about Apple, like 2%'s not bad. But look at the recovery for this stock since October, from 64 to 89. You got a Vago here, 8% in the past year. That's not bad. Marvell has been hammered. Look at that, baby. It's a haves and have-nots in the semiconductor space, right? 41% downward move. Taiwan Semiconductor. Look at Taiwan Semiconductor, right? The big dog themselves. First off, that's a huge comeback from the November lows at the beginning of November, 60 to 90. I mean, last I checked, that's over 50% move for the stock price, but nonetheless, still down about 25% in the past year. Skyworks Solutions, a stock I personally own, dividend play, value play, and slight growth play, down about 23%. This stock's a pretty fair value stock as of right now. Cuervo, down about 19% in the past year. Micron got hit pretty hard, 26%. But it's another one of those. It's come back pretty nicely off those lows, right? $49 there. And then Qualcomm, semiconductor giant, down about 23%. So it's an interesting kind of semiconductor space. Sometimes with some of these smaller plays, like a Cruisy Doozy, sometimes they have specific things going on in their business model that is propelling them to success. And Cruisy is a stock I owned in the past. I do not currently own the company. Great company, great management team there, and always innovating at Cruisy Doozy. It's definitely been a stock I've been fortunate to make a lot of money on over time. It's one of those stocks, it's kind of one of those stocks maybe you're in for 2 or 3 year span and then you kind of get out of it for a bit because it goes through some unbelievable bull cycles and some pretty vicious bear cycles.
Economy. Also, let's understand something. Texas Instruments has 90% international revenue exposure. What has the value of the U.S. dollar done since late September?
It's gone down.
Oh, and it's gone down by about 12%.
Mainly likely because their chips are made by Taiwan Semiconductor in Taiwan, so do keep that in mind. It's a complicated subject, but
that's going to have a positive impact on a lot of
if you think like all their revenue is coming from international customers, it doesn't really work like that. A ton's coming from actually American companies.
National companies, I think that's in fact what investors should be thinking about, having that type of exposure.
Yeah. There's Texan right there. They report 213 a share. The estimate that we have was 198. You got a revenue beat as well, but it's going to come down to what the guidance was. There was some
It's another one that's fair value right now. For semiconductor companies, usually expect to pay about a 15 to 20 P ratio for these sorts of stocks. If you can get them under 15 and the company's not like in some sort of financial jeopardy or something like that, you're usually getting a pretty undervalued stock. And sometimes you can get these. Like for instance, back in October, November, many of these semiconductor companies, you could get them for P ratios under 15. That's usually a sign that it's a pretty good buying opportunity.
On the street that they would guide below consensus. So we'll try and figure out exactly what the story is there. The stock is not doing all that much, but as you've said, and some are suggesting that right now semis are a lead for the broader market, that what was double or triple ordering isn't so much of an issue at this point. You went from a shortage to a glut of chips. How do we factor that into how we think about this space right now, given the money that's gone in there, by the way, to start the year?
So I think the worst case scenario for the semis has been priced in 2022. I don't view the economic outlook in the binary sense. I've said all along, hard landing happened in risk assets already. You've priced in so much negative news into stocks already. Tell me what else is going to be needed to be priced in to return stocks to the lows in 2022.
Recession.
Yeah, exactly. I was just going to say recession, and especially any sort of significant recession. It's not just about being a recession, it's about a significant one where unemployment spikes to, 6, 7, 8, maybe even 9%, and that would be a situation where earnings tank massively, which means obviously you're going to pay less for the stocks, bottom line, right? Because if let's say Texas Instruments earnings start to fall apart, which they're clearly not, right? But let's say they did, well, you're willing to pay a lot less for Texas Instruments, and people would obviously put immense selling pressure on them and every other stock in the market pretty much, especially a lot of the big dog companies.
I don't think, but a recession, an economic recession, has already been priced into stocks.
No, it hasn't, according to J.P. Morgan's Marco Kolanovic.
Okay, so I respectfully disagree. I believe that
That's
a recession.
What he put out yesterday
I believe
this very hour.
I believe an economic recession has already been priced into stocks. A significant earnings recession, that has not been priced into stocks. Are we seeing an indication of an earnings recession in these numbers after the close? Doesn't look like it to me. I'm not wildly bullish. I don't believe in the 4,800 calls. I just think that you have to be balanced to understand that you're marking time. The market can move on either side of 4,000, and you could find opportunities to generate alpha.
How is a recession priced into the market if we're 15% off of the 52-week low for stocks? We're only down 13.33%.
Scott, the stock market is not the economy. I'll say it over and over again. What did D.R. Horton do today? It made an all-time high. What is the housing market doing? The housing market is contracting. Go try and sell your home. You can't do that.
Yes,
you can't sell a home right now. The transacted.
Didn't those stocks already take a hit? Maybe that area is troughing.
No, those stocks have been remarkably resilient. The home builders throughout the second half of 2022 into 2023.
It's a fake rally, I'll tell you that. It's a fake rally, but D.R. Horton specifically. And I think I called this out to the private stock group this past week. D.R. Horton specifically, that's a home builder that is the lowest end home builder of all the home builders. Like their average selling price of their homes is the cheapest of the cheap. And so if people are tighter on budgets, right, and if they are going to buy an actual new home and construct a new home, right, well, they're going to usually go to the cheapest if times are tough, right? And so I think it's kind of almost like a barbell approach where you either want to be at the very highest end, which is more of a toll, right, or the very lowest end, if you're even interested in playing housing, which I wouldn't be because I think housing still has quite a while ahead of it in terms of like weakness there, right? But it can hurt like the KB Homes, the Lennars, and some of those guys that kind of play in the middle there. So in terms of earnings recession, I mean, three companies, you've got to wait for three companies. If these three companies they don't report disasters and have pretty decent commentary, then, hey, maybe the whole recession talk is getting overblown. The three companies are Apple, Google, Amazon. Listen to those babies. Those are the ones that are actually going to give us detail. Texas Instruments, Microsoft, no, okay? They're not giving us, those aren't the sort of companies that are going to give us that level of detail about how the consumer's actually doing and if we're going to see a major pullback. Apple will tell us that. Amazon will tell us that, and Google will tell us that. That's the bottom line with that. Appreciate everybody joining me as always. Thanks for being here, guys. 22,300 plus subscribers. If you're looking to take your wealth very serious over this next few years and level up, consider applying for my private stock group and private wealth group. That will be the pinned comment down there. And have a great day.